It's the last trading day of FY24 and the financial year has seen a diamond jubilee number of companies head to Dalal Street and tap the primary markets. And as they say, the numbers don't lie. So let's take a look at this data from Prime Database. Now FY24 saw 75 companies have their IPO, and these 75 companies raised over 61,000 crore rupees. Now on a year-on-year basis, this figure is up 19%. But one must keep in mind that the previous year had a mega IPO, that of LIC. So excluding LIC, that 19% number goes up to 58%. But here's the interesting bit. The market went up and away after bottoming out last March. Now the promoters and early investors wondered, why not rake in some moolah? And hence, this is the result. 20% of the funds raised came from private equity and venture capital selling shares in the IPO. 29% came via promoters selling shares from the offer for sale component. Still, 47% or nearly 29,000 crore rupees were raised in FY24 through a fresh issue of equity shares. That number in percentage terms is the highest in 7 years. But how did these companies use the funds that they raised? Now remember, we highlighted a few months ago that debt reduction was one of the key reasons why the companies went public and raised fresh capital. Now that is still one of the major factor, but 1/3 of these funds were used for working capital requirements, and debt repayment comes a close second, followed by capex and other factors. Now the market going up immediately reflects in investor sentiment, and this IPO subscription chart is proof of that. Now 22 out of the 75 IPOs of FY24 saw subscription in excess of 50 times. Now 32 of them were subscribed between 10 times to 50 times. Now speaking of sentiment, retail investors flocked to the primary markets to have a slice of the IPO pie as well. Now take a look at this. In FY24, an IPO saw 13.17 lakh applications from retail investors on average. Now that in comparison to FY23 is more than double, where the figure was just over 5.5 lakh. Another no-brainer, the first Tata Group IPO in 2 decades kept the street and the investors glued to it, and Tata Technologies saw the highest number of retail applications with over 52 lakh applications coming. And DOMS Industries and Inox India complete that list, and they saw hefty subscriptions from retail investors in their own right. Now interestingly, all 3 names have either doubled or almost doubled from their IPO price. Now while we may have seen more IPOs this year, the average size of the IPOs have gone down. Now FY24 saw an average IPO size of just 815 crores, well below the 1400 crores in FY23 and over 2000 crores in FY22, which also saw some peak IPO frenzy. Now we saw IPOs of various sizes, less than 100 crore, more than 1,000 crore. Now Mankind Pharma and Tata Technologies feature as 2 of the biggest IPOs of the year in terms of size, between 3.5 to 4,000 crore rupees. Now on the flip side, Plaza Wires and Vibhor Steel were the smallest with just over 70 crore issues. Unsurprisingly, the smaller IPO size also reflected in the hefty subscription numbers. So what lies ahead in FY25? The Prime Database says that 19 companies looking to raise over 25,000 crore rupees already have SEBI approval and are just waiting for the iron to turn hotter before they strike. Now another 37 companies with plans to raise 45,000 crore rupees through the IPO route are awaiting blessings from the regulator. So we bring the curtains down on FY24, an action-packed year in terms of IPOs, and if the pipeline is anything to go by, FY25 promises to be just as action-packed, if not more. After all, who wouldn't want to make hay while the sun is shining?